Question number 16. There are 3 partners in a partnership. 3 are there. The total of their current account at the start of the year 18,000. End of the year 32,000. The total drawing for the year amount 22,000 is the drawing. Salary also given. What is the question? The question is to calculate the profit. What is the profit? What is the equation to calculate profit? We have to find the profit. Profit is equal to, you have learned the incomplete records. What is the equation to do the profit? Profit is equal to closing capital minus opening capital plus drawing. So here closing capital is how much? The closing capital 32,000 is the closing capital. 32,000 minus what is the opening drawing? 18,000 plus what is the drawing? 22,000. So the correct answer is 36,000. Next, question number 17. What is the question? Which statement about right issue is correct? These shares can be offered anyone. No, right issue is not offering anyone, only existing shareholders. These shares can only be offered to the existing shareholders. B is the perfect answer. The third is we cannot be issued at premium. No, we can issue at premium. Cannot be sold less than the market price. No, any price we can issue. Perfect answer is answer option B. Next, 18. A company's profit from operation has increased 10% in a year, while the gross profit has only increased by 5%. So gross profit only 5%, but profit from operation increase means the cost control must be very good. Which factors would explain this? First one, a decrease in distribution cost. Distribution cost decrease means expense decrease, profit will be increased. Next, decrease in finance cost. Finance cost is not included in the profit from operation, so it will not affect. An increase in rent received, it will increase the profit from operation. An increase in selling price. Increase in selling price will not increase the profit from operation, it will increase the gross profit. So the correct answer is 1 and 3. Option B is the correct answer. Next, 19. A trial balance on 31st December 2020 showed the following: ordinary share capital, retained earning. On 1st January, directors creating a general reserve also they created. At the same time, 200,000 ordinary share were issued at 300,000. So 200,000 ordinary share they issued at 300,000 means they must be issued at premium. Which amount did the total reserve increase on 1st January? Here actually they issued 200. For 300 means it is on premium. The premium is the reserve. So 300 minus 200,000 is equal to 100,000 is the increase in the reserve. It's very easy. Option A is the correct answer. Next, 20. The following information is given in the financial statement of a limited company. Ordinary shares, general reserve, retained earning, debenture. What is the value of total equity? Equity means total shareholders fund. Total shareholders fund is ordinary share capital plus reserve plus retained earning. So 12 lakh plus 120,000 plus 710,000. The correct answer is 20 lakh 30,000. B is the correct answer. #21. The table shows year-end information of the company. They are given different information. What is the question? What is the return on capital employed? ROCE. ROCE means profit divided by capital employed. ROCE is equal to profit from operation divided by capital employed. Capital employed is equal to, what is capital employed? Capital employed is equal to capital plus long term liability. So here, what is the profit from operation? Profit from operation is given in the question. Profit from operation 14,000. So ROCE is equal to 14,000 divided by 14,000 divided by, they are given here. Capital means ordinary share, share premium, retained earning, plus long term liabilities, debenture. So we have to take the full of this part. How much it comes? 30 plus 70 plus 15 plus 35, 150,000. So 14,000 divided by 150,000 into 100 is equal to 9.3%. So the correct answer is 9.3%. Next, question number 22. A company provided the following information. What is the question? What was the non-current asset turnover? The question is, we have to find the non-current asset turnover. So, non-current asset turnover, what is the equation to calculate non-current asset turnover? Revenue divided by non-current asset turnover is equal to revenue divided by non-current asset. Here revenue is equal to, they are given in the question the revenue. What is the revenue? 390,000 divided by, what is the non-current asset? Non-current asset they are given with the depreciation they are given. So we have to remove the depreciation. So 260 minus 65, 195,000. So divided by 195,000 is equal to 2. So the correct answer is option D. Next, 23. A garage owner paid the following cost. Garage equipment. What is the question? Let's check the question first. Which of these are direct cost? Yeah. So the first one they are given garage equipment repairs. Garage equipment repairs is not the repairing is not the direct expense. This is not the direct expense. The second one mechanic wages. Wages is always the direct expense. Rent paid for garage premises. This is not direct, this is indirect expense. Spare parts used to repair vehicles. This is also the direct cost part. So the correct answer is option D is the correct answer. Next, 24. A business provided the following information. They are given number of labor hours, total overhead. What is the question? What was the monthly fixed overhead cost? So here they are given the overhead cost. This is include total fixed cost also included in the overhead. So we have to check what is the difference. February to March, the difference is 12,000. Number of hours 12,000 difference. How much is the difference in the overhead? Because fixed cost will be the same. Overhead, variable overhead only will, labor is the variable overhead only will the amount will change. So the difference to produce 64,000, 918,000 to produce 76,000, that is 1,062,000. So to produce 12,000 extra, they spent extra 144,000. So we'll get the variable cost. So the variable cost is equal to 144,000 divided by 12,000 is equal to 12. 12 is the variable cost. So we can find the fixed cost by applying February, March or any labor of hours. So we can check with the 64,000 here. So 64,000 multiplied 12 is equal to total overhead means variable cost plus fixed overhead and variable overhead. So 64,000 multiplied 12, that is 768,000 only. But here it is 918,000. It means that the extra amount is the fixed overhead. So what is the fixed overhead? Fixed overhead is 918,000 minus 768, the variable overhead. 768,000 is equal to 1,50,000. So the correct answer is option B. Next, question number 25. What is the reason for calculating an overhead absorption rate in the manufacturing business? First one, to control overhead expenditure, no. To determine whether or not supplier is overcharging, no. To enable overheads to be apportioned to cost center? No. To establish cost per unit of product. This is the perfect answer to find the cost per unit of the product. Option D is the correct answer. Next, 26. Budgeted overhead expenditure is 180,000. Budgeted labor hour 12,000. Actual overhead amount 196,000. Actual labor hour 12,200. What is the under overhead? Under absorption or over absorption? We have to check. This is under absorption or over absorption. How to find? So here 12,000 unit was the budget, but actually 12,200. So first we have to find the budgeted cost, budgeted price. Budgeted price to produce 12,000, they spent 180,000. So we have to find the per unit cost. Per unit cost is 18,000 divided by 12,000. This is the budgeted price. Budgeted price is 15. So we have to make the flexible budget. To produce 12,200, the budgeted price, budget to produce 12,200 into 15. 12,200 into 15 is 183,000. But actual, what is the price of actual? Actual is 12,200 multiply, what will be the price? 196,000 divided by 12,200 is equal to 60. Into 16 is equal to 196,000. So here it is increased or decreased? This is increased. How much is the increase? 196,000. The difference 183,000 is equal to 13,000. Budget was decreased compared to actual. Actual is more, budget was less. So this is under absorption. 13,000 under absorption. So the correct answer is D, 13,000 under absorption. Next, question number 27. Why might a business use marginal costing? Marginal costing means calculation of by using the variable cost. So, to calculate break-even point, correct? Marginal costing will help to break-even point. To decide the most profitable use of limited resources, perfect. To decide whether to make product buy or produce. So all are correct. So the correct answer is option A. Next, 28. How is margin of safety calculated? Margin of safety means actual sales minus break-even sales. So the correct answer is option A. This is the correct equation. Next, 29. A business manufactures and sells single product. The following information available. They are given selling price, variable cost, total fixed. The profit for this year 20,000. And they are given this year profit, this year details and estimated next year also. What is the question? Question is, how many units must be sold to achieve the same profit next year? Next year, how many units they have to sell to achieve which profit? 20,000 profit. So first we have to find the equation. What is the equation to calculate achieve the profit? It means estimated fixed cost plus profit divided by variable cost. Here the fixed cost is fixed cost of estimated year. What is the fixed cost of estimated year? 84,000 is the fixed cost. 84,000 plus what is the profit? Profit we are estimating 20,000 divided by what is the variable cost? Variable cost means selling price minus, not variable cost, contribution. The equation not variable cost, it is contribution. Fixed cost plus profit divided by contribution. So the contribution is selling price minus variable cost, that is 25 minus 17 is equal to 8. 8 is the contribution. So divided by 8, the answer is 13,000. Correct answer is option D, 13,000. Next, question number 30, the last question. A company wants to sell 50,000 unit. They want to sell and 50,000 unit and achieve profit 6 lakh. Its variable cost 60. Total fixed overhead 4 lakh. Which selling price per unit company needs to charge? Company has to get profit 6 lakh. Then profit is the value added. So cost plus profit. They should get the cost plus profit must be the sales revenue. So the cost 50,000 unit into 60. So the calculation is 50,000 unit multiply 60. This is the variable cost plus fixed cost 400,000 plus the company want to get profit 600,000. So total they have to get total revenue. They have to get how much? 4 million. So 4 million revenue they have to get. 4 million revenue, then only they will achieve 600,000 profit. It means 550,000 into 60 plus fixed cost plus value added or profit they should get. So here the question is how much the company, how many selling price, what is the selling price they should charge? 4 lakh they have to get the revenue. So the per unit is 50,000. When they are selling the 50,000, 50 unit, what will be the selling price? It will be 80. Correct answer is option D. So we have done the complete sample paper now. Hope you all are clear with today's solution. If you have any doubt in the solution, please put in the comment box. I will be clearing you. And also, if you are not subscribed my channel, please subscribe and support. Thank you.